Right. Good morning, everybody. Is it morning? Yeah? It's morning on this side. You guys are a bright, shining group of people. Welcome to our office. My name is Araik. You'll get a chance to know a little bit about me as I give a presentation here today, but just really quickly, I've been a part of World Financial Group for about 8 years now. This is going on 9, and this company changed my life. Just like you, I was sitting in that chair 8 years ago. I had no idea what I was getting myself into. Someone called me and said, you got to show up to this meeting. And I showed up. And after that point, guess what? Now I get to stand here and give you guys the same information that literally changed my family's life and my life. So welcome. This is a day that might change your future. So have your ears perked up. Try to capture all the good nuggets we're going to share with you. And hopefully this doesn't come off as a lecture. I hate that. So I'm going to try to just have a conversation with you if that's okay. Sounds good? Awesome. So I always like starting off what we're going to talk about today with pointing out something obvious. How many of you guys are in this country to have a better life? Yes? Who's immigrants? Raise your hand. I'm an immigrant. I was a year old when I came to this country with my family. My family escaped the collapse of the Soviet Union to come to America. Why? Because the grass is greener on the other side, I guess, right? But they came here for what? They came here for this American dream right here. True? And so how many of you guys feel like today everybody's living the American dream? She's like shaking her head already. No. A lot of people, I think, are like, this is more like the American nightmare, not the dream, right? So today what we discussed about is going to address the question, probably for you, whether is this American dream even possible for people today? Because 30 years ago, 35 years ago, that's when my parents came to this country. They were chasing this American dream. So why America out of all places? Well, let me share with you guys some statistics, some recent statistics about becoming very, very successful in this country. Does everyone in this room want to be very successful, wealthy? Yes? Who doesn't want to be a millionaire? Raise your hand. You can leave right now. Hey, don't get me wrong. When I share this with people, some people say, I want to be comfortable. Who's heard that? Yes? Yes. I'm going to share with you what comfort looks like too. And then you'll realize how far away people are from that as well. But let's talk really quickly about being super, super successful in this country. This is a news article from CNBC. It says, last year, the US added 1,000 everyday new millionaires in 2024. Crazy when you think about it. That means now that we are sitting at probably more than this now because we're 2026, but as of 2024, the total number of millionaires in this country, net worth millionaires, was about 24 million in population, right? So that represents about 10% of this country, right around 10%, right? However, being a net worth millionaire is different from being a cash flow millionaire. True, making $1 million a year is different from being worth $1 million. And we'll talk about that in a moment. But it says here, the US is the home to the most millionaires, tallying 23.8 million in 2024. The next best place to be a millionaire is China, coming in at a close second with 6.3 millionaires. Out of how many people? Billions, right? And so that's why my parents said, let's go to the American dream and not the Chinese dream. No offense to anyone who's got a Chinese background. But yeah, this is probably the best place, best chance we have to becoming very successful. Would you guys agree? America is probably going to give you the best shot of making something for yourself. So, however, being, like I said, a net worth millionaire is different from being a cash flow millionaire. Let's take a look at cash flow millionaires last year. So it says a record number of people are earning $1 million a year or more in this country. And it says out of the 150 million tax returns they filed last year, 800,000 of them were making $1 million or more. And so that represents roughly about 0.5% of our population. Does that make sense? So 10% of people in this country are millionaires who are worth $1 million. Less than 1% are making $1 million a year or more. Much harder to get into that space. True? And I'm going to share with you what that might look like in our company. But let's really quickly talk about what it takes to get to this top 1%. Who's heard of this before? 1%ers, top 1%, right? You might have heard of this before. In California, by the way, we are in the most affordable state. Yes? No. In California, you got to make $1 million a year to be in top 1%. But across the country, The average is right around $780,000 a year. How many of you guys know people making that kind of money? Anybody? Maybe? What about comfort, Arai? This is where it gets me. So people say, I don't want to be a millionaire. I just want to be comfortable. You guys have heard of this saying before? Yes? Okay. So what does it take to be comfortable in this country? Well, if you got a family of 2 married, you got to make $277K a year in California to be comfortable. So how many people do you know making that kind of an income? Believe it or not, the average in this country, the average person in this country makes $75K a year. And so most people, that means, are not comfortable, right? Most people are struggling financially. As a matter of fact, the average person today lives paycheck to paycheck. The average person has less than 10 grand saved up in their bank account. The average person couldn't even cover a $1,000 emergency expense, the vast majority of them. And the average person ends up retiring with about 200 grand when it comes to retirement money in their 401s and IRAs and these kinds of things. So question, what the heck can you do with 200 grand in retirement? How long does that money last you before you're back at Walmart bagging groceries? Right? Not in California, that's not even good enough for a year. So median household debt is $18,000. The median savings is $8,000. Backwards, right? We are a consumer nation. Median income, I already told you, is $75,000. What about buying a home in this great state, California, right? The average home price right now, 850 grand. That means if you make 75K average, your entire income and some has to go to pay for a mortgage. $7,000, $8,000, $9,000 a month. Wow, right? So why is that? Why is the average person struggling today financially? Who can tell me? Where does it start? Is it because the entire government is conspiring against you to make you poor and unsuccessful? I wouldn't go that far and call that conspiracy out, but I will point out that one of the main reasons why people end up struggling financially today is because from a very young age, no one ever teaches us about money. Would you guys agree with that? You guys are all smart people, went to school, got college degrees, whatever the case is. When was the last time you learned anything about money in school? Did they teach you in elementary school? No. Did they teach you in high school or college? Probably not. When you got your first job at the HR, when they handed you the benefits package, did it come with the financial education attached there? No. When you went to the bank and opened up your first bank account, did they tell you how that worked? Not really. So nowhere along the way does an education come attached with any type of a financial instrument that you probably got yourself involved with. And we'll talk about that for a moment. But let me share with you another statistic. How many states do you think require our high school kids to pass one course of personal finance before they're allowed to graduate? How many? It's a little more than 0. It's actually 6. And California is not one of them, but only 6 states across the country have one course of dedicated financial education. Now there's about 30 states that do some form of a financial education that's part of like an economics class or some type of a class like that, but rarely do they ever teach anything relevant to personal finance, like how to save money, how to invest, how to protect my family, how to plan for retirement, how to pay less taxes, how to do all of these things. So it starts from a very young age. Unfortunately, no one is teaching us about money. So let me really quickly introduce you to who we are, why we do it, what we do, and how we do it. If you haven't realized by now, we are World Financial Group. We are part of a very large conglomerate of financial services companies. Are any of you familiar with who Aegon and Transamerica are? Yes? So Aegon and Transamerica both have been around for 100 and maybe even more with Aegon, 180 years. These are global financial institutions. Aegon has about $500 billion of assets right now, and World Financial Group is part of the Aegon family of companies. Right now, World Financial Group has about 92,000 licensed agents. There's about 3,500 offices like this across the country, and we have about 7-8 million families that we've helped so far and growing. Now, it's not about who we are. It's about what we do. That's unique, and how we do it that makes us unique. So How many of you guys are familiar with some of these companies? You may have seen these logos before, yes? The Nationwide, the Prudentials, the Pacific Lives, and all of these great financial institutions. World Financial Group is basically the middleman. We have been in charge and trusted with the marketing and the distribution of some of these products and services. And so what makes us unique then, Araik? What is so different about you? What can you do for me that I can't do on my own, or figure out on Google, or do ChatGPT, or go down to my local bank and figure out there? What's different about us? It's two things. Number one, it's who we do this for that really makes us different. Why? Because when I was young, 16, 17, 18 years old, my first ever interaction with any financial institution, can you guess what it was? The bank, right? Got myself a couple of, maybe like $1,000, went down to the bank, wanted to open up a bank account because keeping it under the mattress in my shoebox was not a smart idea, I guess. So showed up to Bank of America, I remember it like yesterday, wanted to open up an account, walked up to the teller, here's my money, signed me up. They said, do you want a checking and a savings? I said, what's the difference? They couldn't explain it to me. They said, the savings gives you 0.01% return. I said, sign me up, sure, that sounds great. And as I turned around to walk away, she went a step further and said, Mister, don't walk away. We have a promotional offer right now. Do you want to sign up for our $300 credit card we have for students? I said, sign me up. Sounds good, free money, right? Fast forward, 2 months later, what happened? Araig gets his statements in the mail. You, Mr. Araig, you overdrawn your account by $35, minus 35, minus 35. Oh, this credit card you had, you spent $500, you only had $300 on it. So I got myself into some financial mess as a kid. I learned the hard way. How many of you guys remember that your first interaction was with probably the bank, right? So guess what? Nowhere in that process did a financial advisor or some type of a professional at the bank sit down with me, young 18-year-old punk kid with no money to his name, sit down and educate me about what I should do with this $1,000. Looking back now, if all that I had done was take that $1,000 and invested it instead of putting it in the bank, can you guys guess what would have happened today? If I took $1,000 and bought Apple stock, for example, give me a number, just throw it at me. How much do you think it would be worth today? This is, I'm talking 18 years now. How much do you think it would be worth after 18 years? $650,000. $1,000 investment into Apple stock. But no one did that for me. Why? Because I didn't fit the picture of someone who needs a financial advisor. I didn't have $50 or $100 or $250,000 minimum sitting in the bank so that a financial advisor would even just look and breathe in my direction. I didn't fit the picture. So I get overlooked, just like most average people do. They get overlooked because most average people have what? No money in the bank, living paycheck to paycheck, etc., etc. So the who we're doing this for is very unique. We want to help everybody. We want to make sure no family is left behind. All of the average and ordinary people that are overlooked by the traditional financial industry, that is who our mission is for. That is who we're called to serve. Now, don't get me wrong. If you're a millionaire, call me. I'll help you. But that's not the point. The mission of our company is no family left behind. Also, the way that we do things is very unique as well. You guys are here today, right? You took time out of your day. You're going to walk away here with a lot of good nuggets and a lot of good concepts. We're actually going to give you some value. We're not going to charge you for it. You're not going to pay anybody to get a financial advice. You're not going to sign up with anything. You guys are going to walk away with knowledge. And so we lead what we do with education first. We want to teach you how to save money. We want to show you how to protect your family. We want to show you what it means to plan for retirement. And we do it through education. We have some great products. We have some great services. I'm not going to go into too much detail here, but some of the things that we do for people are right here on the right-hand side of your screen. Investments and retirement, protection and insurances, college funds, business strategies, estate planning. I mean, there's a lot that we do. There's about 140 different companies we work with and about 300-400 different products and solutions we can offer to people. Now, you guys are a diverse bunch of people. You guys are different age groups, different backgrounds, different incomes. So there's no one product or solution that fits your needs. We'll talk about how we customize things for people. But I want to get into some very basic concepts that I think apply to most of you in this room. We're going to talk about some important things I want to share with you. We're going to talk about protecting your assets, protecting your income. We'll talk about compound interest. We'll talk about investing without much risk. We'll talk about building tax-free wealth. These are good ideas. Yes? Cool. So let's get into it. So first thing I want to lead with is your greatest wealth building tool, your income, right? If you don't have an income, then everything I'm about to share with you doesn't matter, because you need help making money, not saving money. Does that make sense? And so if you have an income, this is your greatest wealth building tool. And so I want to start by sharing with you some important things you might want to consider. Because at the end of the day, if you want to be financially successful, you have to consider that financial success starts with having some level of financial security, knowing that I put my head on the pillow and no matter what happens, God forbid something happens to me, my family's not going to starve. Does that make sense? And so we'll talk about that. But as I go through these next set of statistics real quick, I want you to ask yourself the question, will a health challenge today for you or even for your family member create a financial challenge for your family? Because that's what I see as most often that hurts people financially. Let's talk about this for a moment. Every 34 seconds, there's a heart attack that happens in this country. Every 40 seconds, there's a stroke. 60% of adults already have a chronic illness, and 1 out of 3 people end up suffering a cancer in their lifetime. Why do I share that with you? Because 2 out of 3 people today go bankrupt because they don't have these protections in place. They haven't figured out, how do I make sure that if something like this happens to me, I'm not going into a financial mess to take care of it. Because hey, if you got health insurance, great, that pays for your medical bills, but who pays for the time off from work? Who pays for the mortgage? Who pays for the electricity bill, right? So we'll talk about this. I have a personal story I'll share with you about that as well. But everything starts, when it comes to building wealth and comes to building financial success, everything starts from having the right foundation. Just like building a house. So I studied engineering, that's my background, right? So when I see a house, I'm like, it needs to have a foundation. Why? Because one wind, one earthquake, one tornado, and the whole thing comes collapsing down. Does that make sense? So step one, if you want to be financially successful, you got to protect your income. There's a couple different tools you can use to do that. How many of you guys are familiar with what life insurance is? Yes? Pretty obvious. What about long-term care insurance or disability insurance? You might have heard of disability insurance, but what about long-term care? What about living benefits? Maybe, maybe not. So I'll share a story with you about living benefits before I move forward. When we first got started in this business, it was 8 years ago. It was my mom first who came to this company, signed up, got started. 6 months into it, she used to come and go at these meetings, and me and my dad were chilling at home. She would come home excited after these meetings at like 11 p.m. and just bouncing off the walls. We're like, lady, where are you going? You know, you come home tired after work, change from your scrubs, show up to these office meetings, and then you come home talking about building wealth. What kind of Kool-Aid are you guys drinking? So got me curious enough to show up to a meeting, got my dad curious enough to follow, and we basically got started pretty much as a family together in this company. One of the first things that we did was educate ourselves about this stuff. We got my parents some life insurance. We got my parents some living benefits policies. Why? Because for 25 years living in this country, they were living under a rock. They didn't even have a concept of how to protect themselves. I'll go even say a step further. They were totally ignorant about it. Anytime someone tried to approach them about it, they would say, we don't believe in that culture or religion. What do you mean, make money after someone dies? That doesn't make sense, right? They didn't believe in it. Okay, they didn't believe in it. Because they didn't believe in it, by the way, when my grandma was 82, she passed away, who had to pay for the funeral, no life insurance. Mom and dad had to pay for it, $20,000, $30,000, $40,000. But that's not the point of the story. So we got my parents some coverage. Luckily, they were healthy enough to get coverage for it. My dad was 58 at the time. Fast forward, last year in August, my dad diagnosed with prostate cancer, stage 3. They removed his prostate in November, did an operation on him, and they found out it's stage 3 cancer. Luckily, we had this policy in force. Guess what? He had about a $300,000 benefit. And we submitted a claim to the insurance company. He got a tax-free check. January, got paid out. So my family is a living experience of these products and services working. And it's a blessing in a disguise, right? I would never wish for my dad to suffer a prostate cancer. But now it happened for a reason. Now I get to be up here and speak to you about it from this stage. So get yourself financially situated when it comes to protecting yourself. Because if we're going to talk about building wealth and investments and all these great things, if you don't have this set up, the whole thing just comes collapsing down, right? So the next part of my presentation, we're going to talk about investing. We're going to talk about how to take your $1 and turn it into $2. Does that sound good? Right? Then we'll talk about, okay, what do I got to do to maybe enjoy that money and make sure that I can pass it on to my next generation, right? Give the next generation a leg up. Does that make sense? So let's talk about this. There's a couple things I want to share with you when it comes to growing money. This is an exciting topic. And so one of the first things that really intrigued me about this was this whole rule of 72 concept. How many of you guys have heard of the rule of 72? Yes? So if you want to know how long it takes for my money to double, if I'm going to invest it somewhere and they're going to give me an interest on this money, the rule of 72 will tell you how long it takes for your money to double. So I'm going to ask for a volunteer in the room that wants to help me out in this example. Who wants to pretend to be 29 for me here today? Who's close to 29? Anyone? 29? Who's 29? I'm going to pick on somebody. Ashot, right? Ashot. So Ashot's not 29, but let's assume Ashot's 29 today. And Ashot goes down to, where do you want to invest? Let's say you go down to the bank, like me. You don't know much about money. You go to the bank, you say, hey, bank, I got 10 grand to my name. I want to double this money. What can you do for me? I want to invest it. So the bank's going to say, well, Ashot, you don't have $250,000 for me to introduce you to the financial advisor. But guess what? I can set up you in one of these savings or CD accounts that can, give you what? 3 or 4%. Yes? You guys are familiar with what savings and CDs pay right now? It's about 3 or 4%. So at 4%, Ashot, what do you think? How long it's going to take you to double your money? A pretty long time. But the easy way to calculate it is by using the rule of 72. And so how do you do it? Well, you take 72 and divide it by whatever percent you think you're going to earn. In this case, let's assume you're going to get 4 at the bank. So 72 divided by 4 tells you how many years it takes you to double your money at 4%. And so Ashot, you're going to start at 29. By the time you're 47, you'll have 20,000. Another 18 years later, by the time you're 65, you'll have 40,000. And then you'll look back and say, well, 40,000 is what 10,000 was worth when I was 29 years old, right? So if you want to grow your money, what's the first thing you realize here? You got to get more than 4%. Why? Because inflation's already 4%. Does that make sense? Sometimes it's much more than that. Like in the past couple of years, it's 8%, 7%, 9%. True? So we got to look at ways of getting more than 4. Okay, Arai, you're making sense here, but who the heck's going to give me more than 4, right? How safe is it? How guaranteed is it? Can I lose my money? Do I got to be 29 to do this? Do I got to have 10 grand to do this? Good questions. We'll get to that in a moment. But let me make the case for getting more than 4%. Let's assume you're going to get 8%. How long do you think it's going to take you to double your money now? 9 years. True? And so by the time you're 65, Ashot, what do you think you're going to end up with? So a lot of people say 80, but it's a lot more than that because it's compounded, right? It's every 9 years. So you actually end up with 4 times the money, 160,000. Pretty interesting, right? So this is the concept, the rule of 72. This is an estimate. By the way, it's not perfect math. Go and ask ChatGPT, it'll tell you. But this is how you can estimate like how long it takes for money to double. So if you're going to grow money, you got to look at definitely getting more than 4, you guys. Because at 4, you're just spinning your wheels, making sure you're not losing to inflation. Okay, Ara, you make sense. So who the heck's going to give me more than 4? And how does that work? Well, there's actually 3 main ways that you can grow your money. The first way is called fixed. That means that you put your money in the CD or the bank or the savings or whatever it is, and they give you a fixed rate of return. They say, we promise you that you'll never make more than 4, but we promise you will never make less than 4. Sounds like a good deal? Maybe. All right, so that's fixed. The next way you can do it is by putting your money in the market. Variable, right? One day up, the next day down, next day up, next day down, and so on and so on. And so you could put your money in stocks, you could put it in real estate, you could put it in crypto, you could put it in variable contracts, variable annuities. These are things that fluctuate with the market. And then there's a third way that I learned about in World Financial Group. Kind of changed my perspective on how things work. And that's called indexing, which is the combination of fixed and variable. Imagine they had a baby, you would get index. So I'll explain to you how index works in a moment, but let's really quickly talk about fixed and variable. So what is the challenge of just getting 4% every year? I told you already 2 times. Just barely inflation you're covering, right? Okay, so that's a challenge. What about variable? Why don't more people invest into the market? Did you guys know that 50% of people today have never invested $1 into the market? Why don't more people do it? Fear, right? So humans make decisions on what? 2 emotions, fear and greed. That's the only things that make us decide. And so when it comes to the market, unfortunately, our own nature is our worst enemy. Does that make sense? Why? Well, I'll give you a very simple example. You guys all know what Bitcoin is, yes? When Bitcoin was $12, was anyone investing into it? No. Why? Because they thought it was a scam, it's some fear involved, no one knows, uncertainty. True? But all of a sudden, Bitcoin's worth $90,000 and it's the talk of the town. Everyone's talking about it. Why? So our human nature works in opposite. And so what do people do? When things are low, unfortunately, they're not buying, they're selling. They know they got to buy, but they're not buying, they're selling because they're afraid. They want to cut their losses. And then all of a sudden, the things go up, and up. The market's looking hot, the crypto is looking hot, and now we're buying at 90,000, 100,000. And then all of a sudden you buy in, the whole thing comes crashing down. You bought it at the highs, right? So unfortunately, our own human nature is designed in exact opposite of what we should be doing in the market. There's actually studies done. There's a company called Dalbar. They do a study on this every year. They compare people when it comes to investing. They compare like how human nature changes the return. You know, on average here, if you spend enough time in the market, and by enough time, I mean 5 years, 10 years, you just do it consistently, you're supposed to average 10%. That's what they say. Just put it in the market, indexed fund, S&P, you get 10% long run. But when you factor in human nature of fear, I'm selling when things are low, and greed, I'm buying when it's high, this 10% becomes 4%. So if I'm going to get 4, might as well just do this and call it a day, right? So variable is great, but with variable, people often try to time the market instead of spending enough time in the market. Now, index kind of solves a couple of problems for most people today. I think most people today, they want to get the upside, but without having the downside. That might have been nice, yeah, right? So with indexing, you kind of get the best of those both worlds. How does indexing work? It combines fixed and variable into one strategy. And so when the markets are doing well, you get to participate in some of the wealth. And when the markets are not doing well, you get to lock in your gains and not lose a penny due to downturns. Does that make sense? Sounds too good to be true, but we'll get into more details about how that works. I'll show you some examples. If you want to know more how this works, probably you should get with the person who invited you and kind of ask them, hey, that indexing thing sounded kind of interesting. Tell me more. So let's give you an example of how 10 grand across these 3 different accounts might work in fixed, variable, and index. Let's assume you got 10 grand in a fixed account over 4 years. Well, if every year the market goes up 20%, then goes down 20%, then goes up, then goes down, you don't care too much about that. You're getting your 4, right? And so on average, if you're averaging 4 every year, that means you started with 10, you end up with about $11,697. Straightforward, easy. Now, what if you put your money into the variable account? Well, in a variable account, if it's going up 20, you're getting 20. And then if it's going down 20 the next year, you're losing 20, right? So you're fluctuating. So up, down, up, down. After 4 years, if you average this out, you get average of 10, right? However, an average of 10 ends up being less money at $11,475 than it did with 4% fixed. Interesting. So what does this tell you? It tells you that whenever someone tells you, I'm averaging 10% in my investments, you got to make sure, is that just an average of the percentages, or is that the real returns we're talking about? Because it could be something totally different. So keep that in mind, and I'll share with you the next thing, how index stacks up. So with an index, one of the things people ask is, okay, what is the catch? How come I can't lose money in the index but still get the upside? Well, in most index accounts, you're going to pay for not losing any money. And in this case, I'm going to say that that payment is going to be a cap. So you're limited on your upside. Okay. And so let's say in the first market year, you go up, the market goes up 20%, you're going to get 15 out of that 20. And then if market goes down, you're going to get nothing. You get a bit fact 0. So 0 is your hero in this example. I'll tell you why. Because after 4 years, you end up with $13,225. You're averaging 7.5, but you're way ahead of the guy who's getting 10. And of course, you're way ahead of the guy at 4 too. So that's kind of how indexing works. This is a rough example. It's not a perfect example, you guys. This is just to give you guys a concept of what indexing can do for you. And so there's a couple different products that offer this type of returns: indexed universal life, indexed annuities. Not going to go into too much detail about that, but this is kind of the 3 ways that money can grow for you. Which one you should do? Probably all of them. You should have a good mix and a diversified portfolio. Another thing that you should consider when it comes to investing money is you got to pay your taxes. Yes, you cannot get away from that. Uncle Sam, he wants his cut. And so either you're going to have to deal with it now, you're going to have to deal with it later. And if you're smart, you might put your money where you could get some tax advantages. What does that look like? Well, tax now just means that every year that you earn an interest, you're going to pay the taxes that year. So Ashok, my friend, you put your 10 grand in the bank. They gave you 4% on it. You get your $400. After 1 year, you're going to have to pay your taxes on that $400. You owe Uncle Sam $100, right? So that's taxed now. Savings, mutual funds, these things are taxed now. Then we have another category where a lot of people who have jobs and are employed, they put their money into, right? Maybe you got a job, your job is offering you a what? 401k, IRA, pension, something of that nature. And so this is tax deferred. This means tax later. So as you're putting money into these savings with your job, you're going to end up having to pay the taxes on the back end when you become 60 years old, by the way. And so question, what do you guys think taxes are going to be like on the back end? Do you think taxes are going up in the next 10 years or down? I haven't met a single person that says down. And I'm not a genius, I'm not a tax expert, but I see the way that we're going into a hole. I see the $40 trillion deficit that we have. I see the way that government spends money like it's toilet paper. I see the way that they deplete the Social Security fund that's going to run out in 2035 or sooner. So I know where we're headed. I see it. I hope you guys see it. But here's the question. Does it make sense to put money here? I think it still makes sense to put money there, especially if you make a lot of money. Because this is going to give you a tax deduction now, this year. However, you need to be aware of what could happen in the future too. There's no, you can have your cake and eat it too. You got to pay it from somewhere. Then there are some tools that you can use that are considered tax advantage. This just means that you're going to put after tax money in and it's going to grow tax-free. You can access it tax-free. So there's a couple places you can do that. Roth IRAs, cash value life insurance, municipal bonds, health savings accounts. There's a few tax advantage vehicles too. So again, which one should you do? I think you should do it all, you guys. You should do it all. You know, people ask me like, okay, what's the best? Which one is, what's the best investment, best plan, all this stuff. There is no best investment or best plan, you guys. Let me ask you guys this. Do you all know what it takes to get into shape? Yes. Yes? You know you got to do your push-ups and your sit-ups. We were talking about this earlier. You all know what you got to do. There's a million YouTube videos. ChatGPT will give you the exact plan. You can download your entire nutrition plan, all of that. You have all the information at your fingertips. But why isn't everyone in shape with a six-pack? Consistency, my friend. Everyone right now who is at the gym. It's still January, what are we? January something. So we still got a few people straggling back at that. They're at the gym. But by the time February comes around, the gym's empty. The only people that are there are the people who are there before January, consistently, right? And so just like in money, in finance, it's not so much like what's the best investment, how do I know which one to do, yada, yada, yada. You just got to start. You just got to start saving $1 today, $10, $100. Not just save it, but also invest it, right? You got to start from somewhere, because if you can't steward $1, you can't steward 10 grand. You can't steward $1 million either. So you got to start, and you got to do it consistently. That's why we're here. That's why professionals exist. Professionals will help you keep you accountable to doing it. They'll automate it for you. They'll put a plan in place where it's like a monthly deduction and it's just gone. You don't even see it. And that's how you can become successful, by automating these things, by forgetting about it. You get the bills in the mail, don't you? You get the rent, the mortgage, the electricity bill, the car note, the insurance, all of that. So why not get your investment bill in the mail too? Pay yourself first. And so one of the first things I will suggest for you guys to walk away from here with is called a complementary financial needs analysis. How many of you guys have gotten a financial needs analysis done? How many of you guys have like an Excel spreadsheet with all your expenses and all that stuff in there? Like some of you are like, maybe it's in my head spreadsheet. So a financial needs analysis is like you sitting down with a professional telling them, hey, I make this much money, I spend this much money, this is what my gas bill is, this is what my that bill is, I have these liabilities, I have these assets. I want to be a millionaire and retire with $100,000 a month at 50, all right? What can you do for me? And so when you give a professional that information, they will do what's called a financial needs analysis and tell you exactly what it's going to take for you to reach your financial goals, what are some of the holes you got to plug to get there, and what they can do to help you to accomplish that. You'll get answers to your questions like, how much money do I need to be financially independent? Do you guys know what your financial independence number is? It's very easy to figure out. What do you spend every month on your bills? Non-negotiable. I promise you it's no less than $6,000 a month in California. And so take that number, multiply it for the year, that's 70 grand in a year, and multiply that by 20. That means you need a pile of money, $1.4 million, just to cover your expenses. So that's most people's bare minimum financial independence number. So how much money then should I save on a monthly basis to create that pile of money? Do I start with $100 a month? Do I need to do $1,000 a month? Do I need to do $5 grand a month because I waited until I'm 60 to start thinking about this, right? And so that's another point. The sooner you start, the easier it's going to be. What about this one? Do my workplace benefits adequately cover me? Or am I underinsured? Or am I undersaving money, right? A lot of times I meet people that say, I got all these benefits through work, but they have no clue how it works. They have no clue what they have going on. Another one is, should I pay off my debts? A lot of people are in debt. Should I pay off my debt before starting to save and invest? What about how much insurance do I need? Do I need living benefits? Do I need long-term care? What do I need? So you can get answers to these kinds of questions, and you can get it complimentary. You can sit down with a professional who's licensed, who's dedicated to helping people just like you. That's why they invited you here, to help you. So the next thing I want to share with you, now that we talked about all of the financial basics and all that stuff, obviously there's no one size shoe fits all for everybody. So get yourself, sit down with the person who invited you, they'll get you the personalized advice. The next part of my presentation, I want to address a big elephant in the room. Araik, you shared everything that about money. It makes a lot of sense. Everything makes sense to me. But I'm one of those people who are just barely making 60, 70,000 a year. I cannot even afford to rub two nickels together. What can you do for me, right? And if you're that guy at the bank, guess what the bank's going to do? They're going to say, sorry, don't let the door hit you on the way out, buddy. So here, the conversation is different, because here we do two things. On one hand, yes, we help people with their savings, with their investments, with their insurances, with their financial, all that stuff. But on the other hand, we also have a business opportunity that can help you to make more money. How many of you guys would like to make more money? Yes? I think most of us need to be making more money. So let's talk about making more money, increasing your cash flow, because at the end of the day, you got to make money before you can save money. There's about 4 ways that people make money in the world. You guys know that? If you know a 5th way, tell me. But there's 4 legal, moral, and ethical ways to make money. The first way is by working for somebody as an employee. Employees enjoy one simple thing. At 5 o'clock, they just clock out and they're bounced, they're home, they're done. No worries, right? But that's kind of where all the benefits stop. With employees, the challenge is twofold if it comes to making money. One is that we all have the same amount of time in the world. Would you guys agree? There's no one that gets 25 hours in the day, is there? No. So by default, by nature, there's only so much we can do if we're working by dollars per hours. Make sense? And pretty much all of the successful people I've met, they have figured out how to disconnect the revenue they generate from the time that they have. 99 out of 100 times. And if they're the 1 out of the 100, guess what? They're the guys who listen to the financial planning stuff. They save their $500,000 a month for 40 years. They did that so that they can retire at 60 and 70 and have $1 million. And I'm not sure if that's what everybody wants to do. I think most people, if they could, they would retire yesterday. So an employee's constraint, number one, is how much time they have. Number two, what else is a limiting factor? It's the skill level you have, right? It's what are you bringing to the marketplace? That's why, no disrespect to janitors, but janitors make $20 an hour. And the surgeon, the guy who's operating on the operating table, he makes $2,000 an hour. True? Because one person has a higher skill level. So employees are good, but there's absolutely no leverage, regardless of whether you're the janitor or the brain surgeon. You still are limited by the same 24 hours. So what do you do then if you want to escape from having that constraint? Well, one thing you can do is you can look to become a business owner. Now, there's two kinds of business owners. There are business owners and there are business operators. What I'm about to share with you is someone who is a business operator. Now, what is a business operator? How is it different from a business owner? That's when someone is basically self-employed. So think doctors, think nurses, think photographers. By the way, I did photography for a while too. That was like my hobby in college. That became like a side gig. And then eventually, as I was working in corporate, making 60 grand a year, I had enough clients on the weekends where I would go do like weddings and birthdays and engagements. I had enough money, enough clients on the weekends where I could quit my corporate job. Because I was making here, as an engineer, 4 or 5 years I studied, got a bachelor's degree, and I was making here like $700 a week after taxes. And then one job I would go do on the weekend, do a wedding here, I'd make $2,000 cash, right? So it was like, what do I do? Do I keep doing this in the hopes of one day climbing the corporate ladder and getting to a place where I'm making $150K a year and that's my cap? Or do I quit my job, enjoy Monday through Friday not having a job, and then go work on the weekend on a Saturday and make $2 grand? So I quit my job. I went and I did that. Now, the marketplace was rewarding me $2,000 for an event. I would work 4 hours, 8 hours, whatever it was, but I was getting paid way more per hour than I was ever here, even though I went to school, got myself into debt and all that stuff, got myself a degree. But here or here, they're both still limited by what? The same 24 hours, right? As a photographer, there was no way I could be at 2 weddings at the same time or 10 weddings at the same time. And so how do I then transcend from being a self-employed person, business operator, to being a business owner, even in the realm of photography? What do I got to do? I got to start thinking like an entrepreneur. I got to start thinking like, okay, how do I send photographer A to that job, photographer B to that job, photographer C to that job? How do I build a team so that I can be at more places at one time? Make sense? How do I build a distribution of my product? And so that's really the difference between being a business owner and being self-employed. A business owner has a distribution. Now, there's risks that come with this, right? That's why the business owner gets rewarded for it. They put up money, they put up time, they put up effort, they take on all the risk. 98% of all businesses fail after the first 5 years, all of that, right? So what is the difference? Well, a business owner just simply has a system. They have a system of duplication and how to build a big distribution. And so I'll tie that into what we do here in World Financial Group. But basically, the way to create passive income comes from one of two places, you guys. Either you have to have a business that can do that for you, or you have to do, over the last 40 minutes, what I talked about: save and invest your money. So either you're a business owner or you're an investor, which investors are basically pie holders, shareholders in other businesses, right? And so business is the world of passive income. I have never met anyone who has a job that has passive income. Tell me, if you know someone like that, I would love to meet them. So if you want to have some passive income, you got to consider what kind of a business I can start to create some passive income. Not every business can generate passive income. Here's what I want to share with you. Why build a business in the financial industry? Number one, because you can have a passive income. That's why. I started this business 8 years ago for one simple reason. I sat in this room, I heard the information, I was a photographer, and I had a bunch of clients. I said, all these clients I served, they were getting married, they were starting families, they were buying homes. Like, it's the perfect time to start thinking about money too. So it clicked in my head. I said, there's a great massive market need. By the way, right now, 10,000 baby boomers are retiring every day with $200,000 in their accounts. And they're looking for a way to make sure that money lasts them in retirement. Guess what? The things that we do here, it can help them to do that. And if you bring over $200,000 to our firm, you're making 10 grand on that transaction. You're making 5 grand on that transaction. It's not a little money for sitting down with someone for 1 hour and sharing them information on how to do that. We'll get into that in a moment. Number 2, we are in a recession-proof business. Money never goes out of style. We don't care about inflation. We don't care about the economy. When the economy is down, guess what? People are looking for work. We can recruit them to our business. When the economy is up, everyone's looking to invest their money. I want a piece of the action, right? So we are in a recession-proof business. The skills that you learn here, you can transfer them to any other industry that you want. The skills that I learned here, how to become a better person, this is going to follow me everywhere I go. Before this business, I was a nerdy little kid. I had glasses on, didn't know how to communicate, shake a hand, look someone in the eye, give a presentation, persuade anybody anything, do marketing or sales. These are all skills that if you learn, they're going to follow you everywhere you go. So this business changed my life. Intangible stuff, all the skills I learned. Low overhead. It's a few $100 to get into this business. You can manage this business with like a $50, $60 a month overhead. And you're creating an impact in people's lives. You're changing people's lives. Did my dad's life change when he got that $200,000, $300,000 from the insurance company? You bet, because if he didn't have that plan, guess what we would have to be doing? Back to work, right? Right now he's at home because he can stay home. He can recover. He can use that money to pay his bills for the next 2-3 years. He wouldn't have that if we hadn't helped him. I'll go a step even further. We would have never even known that he has cancer. You guys want to know how we found out he has cancer? We applied for a new life insurance for him. So they sent him to do blood work, and they declined him. They said, your blood's not good. We would not even know that he has cancer today if it wasn't for this industry, for this business. So combined, by the way, the financial industry, this is a $125 trillion industry. Bigger than real estate, bigger than retail, combined, stack it on top of each other. The financial industry is where the most millionaires are made. Now, why build a business with our company? Because you can go and do this on your own. You can go tomorrow, get yourself a license, get started, and start helping families, do investments, sell insurances, sell retirement, all that stuff. You can do it on your own. What does WFG give you for that? Number one, we have a very low startup cost. This is a highly scalable system. You get a full back office support. You guys know what a back office is? That's the side of the business that does your accounting, your payroll, your commissions, your legal, your compliance, all of that stuff. All the boring business stuff that people don't know how to do, World Financial Group takes care of it for you. There's unlimited income potential, and you can actually be a part owner of World Financial Group. There's an ownership opportunity here. So let me really quickly share with you the different kinds of things you can do here. Some people come here and they just want to be an agent. They just want to sell the product, make some money. And you can do that. You don't have to build anything. You don't have to recruit anybody. You don't have to do any of that stuff. You can come here and just sell the product and make money like that. And so if you're just a solo agent on a personal income, and I'll give you an example. You want to sit down with someone every week and you want to help them to set up one of those plans I mentioned, the index plans I talked about. And you're going to help that person put $300 a month into that plan. And you do that 4 times a month. You help 4 families a month. Well, World Financial Group will pay you about $5,000 to $6,000 of commissions. Now, question, how long does it take most people to earn $5,000 to $6,000 at their job? 40 hours a week, 50 hours a week, driving back and forth to work, 16 hours a week, right? Here, how long does it take to serve a client? If you were to guess, one client. Hour and a half, 3 hours, whatever it is, it's much less than 40 a week. Does that make sense? You're not spending 40 hours to help one client. You're spending 4 hours. You're spending 2 hours. So is it worth to make 5 to 6 grand in 10 hours or 4 hours? Yes? So that's one way you can make money here. By the way, all of the business that you do, most of it, not all of it, most of the business you put on the books, pay your residual income too. Which means all the clients I helped 8 years ago when I was getting started, today I'm still being paid for those clients. Now they're not paying me 5 to 6 grand all the time, but they're paying me a small residual of all that business I've done. And it adds up. It adds up. And so if you build a book of business of 200 clients, 300 clients, 500 clients, just by the sheer nature of doing the work, without even building a team, you can build yourself a passive residual income. The next thing is, I think the real value proposition of World Financial Group is not being an agent, but actually being a business owner, being a broker here. So I'm personally a broker here. As a broker, as a business owner, this is where you are allowed to build a team here within the World Financial Group ecosystem. You can build a team within this organization. And there's people that have small teams, 5, 10 people. There's people that have teams of 30,000 people. And you can choose how big you want to build it. Let me give you an example of someone who decides to build a team of 10 people. You want to build 10 agents. By the way, when you do that, company will give you an ownership contract. They'll give you stock-based options, all that stuff. But this is where you can override people. How many of you guys know what override is? Who's heard of that before? One person. That's my favorite word in the dictionary right now. Overriding. So that's when you build something and you get paid for training and teaching other people how to do this business. Kind of like if you were to go and work for a real estate company, right? There's a broker that built the whole thing, and then there's agents that work for him, and the agents go out and sell a home, they split the commission, that kind of a deal. So the same thing happens here in our agency, except it's all kind of laid out and built into a structure already. But let's just say you built 10 guys and you got 10 agents on your team. They're crushing it. They're going out there every month. They're helping 20 families do the same thing, put $300 aside. By the way, helping 20 families with a team of 10 guys, that's like nothing. I know teams of 10 that are doing like 200 families a month. But 20 families a month, you as the agency owner, the leader of this group, could be making around 20 to 25K of income in overrides. That's passive. That's your team working and you getting paid on top of what they do. Not a bad deal. And then you can add into the mix your own, right? Make another 5, 6 grand on top, 10 grand on top. And now you're in that comfort zone, which is a very dangerous place to be, by the way. And there's thousands and thousands of people that do this in our company. But what really gets interesting is where you get into building multiple agencies in this organization. And there's the best example I'll give you is if you were to go out and buy yourself a couple of McDonald's. You guys know how much it costs to buy a McDonald's? About $1 million right now. And you have to be a manager there, work there for like some odd years and have that experience to be able to do that. But this is the exact same thing where you can have multiple McDonald's. You can own multiple agencies. You can build multiple brokers. The sky's really the limit. I'm not going to tell you that all 92,000 agents in our company are doing this. I would say about 1% of our company does this. It's more than the 0.5% of millionaires, but about 1% of World Financial Group agents are top millionaires in this company. Yes? That's just an example. So we have 300-400 different products and services. IUL is one of them. So if you help someone save $300 a month into an IUL, you would get paid what you're going to get paid. Just an example. To give you an example here, let's say you built 10 brokers. You're a leader. You built leaders, right? You built 10 guys who are killers. You got 10 brokers on your team. Together, you got 100 agents, right? And those agents are going out helping about 200 families a month as an organization. You can make about $1 million a year in this company. And there's about 1,000, I think about 1,200 people now doing that. $1 million and more. The top guy in our company is making $30 million. Pretty well. The sky is the limit. If he can do it, why can't I? He's an old Vietnamese guy, like 80 years old now. Barely speaks English. By the way, whenever you achieve success here, they give you like these fancy recognitions and watches and trophies and all that stuff. These rings that they hand out, these are just milestones that you hit in the company. But to me, these rings just mean that you've helped a certain amount of families save for retirement, protect their future, all that stuff, right? So to me, these represent like the millions and millions of people that have been impacted by this company. And so every year they hand out this stuff. We go to like a national convention in Vegas. They parade everybody on stage who's done something and they give them recognitions and stuff like this. So last year, actually this is 2 years ago already, 2024. In 2024, we had 1,700 new people cross over their 50,000 income a year, 100,000 income a year, all the way up to 500K a year income. So each level kind of they hand out a fancy ring. Crossover on this side, we got 67 new millionaires and 750K earners in this company. So how many of you guys would like to be in a place where you have a chance to make 500,000 a year, $1 million a year, 2, 3, 5? The question is where you're at right now giving you that chance? Will you ever be able to make $1 million a year what you're doing? So I want to wrap this up, you guys. What I want to do is hand out some cards. I want to wrap it up with our mission, our vision. But as I do this, I'm going to hand out these cards, you guys. For those of you who are on Zoom, you can get with the person who invited you, ask them to set up a follow-up. But basically, if anything I shared with you here, yes, we're live on Zoom too. If anything I shared with you here is intriguing, you want to learn more about, you have questions, it's not clear, you're down for all of it, fill out a card. And then the person who invited you, they'll help you. Let me actually pass this out like this. You guys can take one and pass it back. So I like to finish with talking about our company's mission and our vision. How many of you guys think that's important to know the core values of what we stand for? Yes? So our company's mission is very simple. We want to make sure that we are providing access and we are providing the tools and we are providing the education and resources to people so that they can build a better financial future. So that you can at least be a little bit more financially successful, so that you can walk away from this knowing something extra about money. That is our main goal. What you do with that, that's your choice. And so that's why we do these events, to provide financial literacy and help families secure their financial future. Our vision as a team is we want to build like a killer team. We want to have the largest distribution team in financial services. World Financial Group has 92,000 licensed agents. We want to double that. We want to go to 180. And Lighthouse, our group here, we want to have a part of that. We're a little drop in the ocean of World Financial Group. I hope you guys know that. This office, by the way, there's about 6 of these like this that are part of our entire hierarchy. So this is just one group that you're sitting here with. So we want to be the largest and most influential team in this company. Why? So that we can reach more people. We can't do it alone. There's 350 million people in this country. Most of them are struggling financially. The average person is living paycheck to paycheck. Most people don't have a savings. Most people don't understand how money works. And we have a lot of work to do. And there's not enough people in this industry to do it with us. So, God bless you all. I'm going to let you go and shut up because I talk too much. My mouth is dry. And so is WFG right for you? I don't know. You can decide that. If you want to get a financial needs analysis for your family, that's checkbox number, I believe, 1. If you want to build an extra source of income, that's number 2. If you want to do both of those things, then you check off both of those things.